Bitcoin is quite literally on the edge of a cliff, with the daily trend almost entirely being lost, the higher time frame indicators flipping bearish, and the short-term price action losing strength. A continuation toward the downside is highly probable. However, just but one major support remains, which is $27,000, in which Bitcoin could possibly bounce from. In today's video, we're going to be discussing the short-term price action, the possibility of a higher time frame correction to 25,000, the CPI data, the macro technical indicators, and of course, our key structural levels on the chart. We're going to go over everything. By the end of today's video, you will have an absolute clear understanding of exactly what to expect and how to prepare. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. As you heard from the intro, Bitcoin is quite literally on the edge of a cliff, with just but one major support level holding it up before a possible continuation all the way down to 25,000. In today's video, we're going to be discussing the short-term price action, the key zones, the triggers, the higher time frame, the daily and weekly trend, what the trend is looking like, what our key levels are, where we could possibly look at to rebuy Bitcoin. We'll also be discussing the macro charts, the market data, traditional markets, CPI, and of course our momentum shift on the higher time frame. We have so much to get through today, guys. Make sure to stick around to the end. If you're interested in daily content that focuses on the data, the facts, the technicals, the charts, pure raw TA, no emotion, no hype, no BS, probabilities, statistics, and data, this is a channel to be at. Consider subscribing, liking the video, and commenting your questions down below. I do read every single last comment and I appreciate them all. You can also join us on Telegram, the second link down below. You'll get access to daily updates, charts, analysis, information, educational posts, news events, so much more in here, guys. That is a second link down below. If you're interested in our VIP channel, you'll get access to trading signals with exact entries, exact targets, exact stop losses, exclusive altcoin analysis. We do Bitcoin trades, we do shorts, we do longs, we do absolutely everything, guys. We give you updates on the market. We have a group chat where we talk about everything from trading to education, helping you guys become better traders. We have a general chat where we talk about everything crypto. Of course, we do exclusive altcoin analysis in here, and of course, all of our videos and a help chat. So much content, so much to look through. If you're interested in the VIP, you can go in and contact me via the pinned comment over here. Let's go ahead, guys, and get into the video, starting off with the market data. So how are we looking for the month? And obviously we had CPI come out, which was incredibly volatile. And in fact, we'll talk about CPI when we get up to the DXY and that chart. We'll give it about a few minutes, but it has been a crazy 24 hours in the market, but something we expected. So far, 5.87% red for May. We're up 261% in liquidations in the last 24 hours, over 186 million. Absolutely wild stuff. Volume over 100 billion, up 82% in the last 24 hours. So some massive liquidations going on, some massive volume coming into the market. Our volatility index for the 30-day period is sitting at 2.09, climbing just a little bit. And for the 60-day period, we're sitting at 2.68, falling just a little bit. The liquidations, of course, were absolutely wild. We saw over $100 million in longs liquidate in just a period of 30 minutes alone. And again, within this last 24-hour period, we have seen around 85% of liquidations be from those long positions. Again, late longs got absolutely destroyed in that CPI drop, which we'll discuss in just a moment. The DXY is still at major support. I've been talking about this for a very long time, guys. The DXY is going to be an absolutely crucial trigger for the market direction as a whole. You can see the DXY has found some decent support along this 1-year trend line over here, this 1-year horizontal level here. If we do lose that level, we can expect the markets to rally and rally quite strong. If the DXY breaks upwards from this downward trending resistance, however, we are going to see the inverse occur. We're going to see the markets crash, we're going to see the S&P 500 and the Dow Jones and traditional indices crash, and we're going to see Bitcoin most likely fall as well, as again the DXY represents the strength of the dollar. If the dollar rises in value, the cost of debt ratio shifts, it goes up. That makes assets more risky and less favorable over the US dollar, and the asset prices do fall. There's a lot more to it. We're not going to get into it too much today, but we do talk about it a lot on this channel. Again, I have a background in economics, so I do discuss a lot of these economic drivers on this channel. We won't get into it too much today. However, I do want to talk about CPI, because CPI came out and the results were a little bit mixed. We saw year-on-year inflation drop, which of course is great to see, but we saw month-on-month inflation rise. And this is something very interesting. And I said earlier in the month, I said it was going to be very interesting to track CPI data, particularly month on month, after NFP, because NFP job growth increased rapidly. When we see a rapid surge of jobs in the market, that can actually be leading for rising inflation. And what we say is a strong economy doesn't always mean a strong market. It can sometimes have an opposing effect. The economy grows too quickly, that can cause inflation to rise. And if inflation rises, the risk of rising interest rates pop up, and that can actually push prices down. So what we saw with CPI was quite a bit of a twist. We saw an initial rally on the precedent that, again, inflation was positive. We saw that year-on-year inflation came out positive. We said it yesterday. We said shorts have been stacking ever since Bitcoin pushed below 27.8K. We expected CPI to flush out these late shorts. So we saw a massive rally up. Then we expected the prices will nuke straight after that massive rally and trap late longs. We saw $100 million in long liquidations, exactly what we saw. We saw a significant rally upwards, shorting all these shorts that were taken in this range got liquidated, and then we saw a significant crash, liquidating all these longs. Again, the data from CPI was neither bullish or bearish. It was actually quite neutral, but I would say it was leading toward the bearish side, as month-on-month data, month-on-month inflation has actually risen. And if month-on-month inflation continues to rise, this can be leading for potentially increasing interest rates in the future. And we already know, guys, interest rates are the main drivers of macro price actions. If interest rates start to go up again, or they start to continue to stay up again, or again, that pivot point, that trajectory we are on towards a pivot gets deleted, then the asset price is going to fall. Let's go ahead and talk about this. DXY, S&P 500 at major macro resistance. A breakthrough this level will continue to price upwards. Of course, we are looking for breaks of these major resistance levels. If that doesn't happen, we can see a continuation downwards. Again, a lot of that is going to be determined by what the DXY does. So watch the markets, watch closely. Let's go ahead, guys, and get into Bitcoin. So much to talk about. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Today, guys, so much to talk about. Let's start on this chart over here. So, as we have been saying for quite some time now, we bought at 16.5K, we sold at $30,000. We noticed a bearish divergence was developing over the course of a few months, and again, this was weakness. Bearish divergences suggest there's a discrepancy between momentum, okay, and the price action strength, or the strength of price action. There's a discrepancy between the two. Momentum is a combination of volatility, liquidity, volume, speed, and velocity. The strength of price action is determined by characteristics of strength, or characteristics of price action. The characteristics of price action are, of course, these, with momentum being a leading indicator for the other 5. So, If momentum is falling, which it was, we can understand that the volume, liquidity, volume, strength, speed, and velocity of the price action is falling as well. So if we see rising price action while the metrics of price action are falling, what we can assume is we have a discrepancy and thus the trend is exhausting. This is why we sold at 30,000. Point number 2 was $30,000 is a major macro trigger point according to the 4-year cycle. We can see it represents the yearly low of the prior bull run. This is a major resistance and trigger point for a macro continuation. We'll come back to it. We have since seen a correction downwards. We have validated 2 of the 3 triggers we are looking for the daily trend to be over. Number 1 was a daily close below the 50 EMA, this red line. Number 2 is going to be a break below the midline of the Gaussian channel. And number 3 is going to be a loss of this local low range right over here, which we'll discuss when we get into short term. If all 3 of those things occur, the probabilities that this is deviation and the price is going to correct to 25K is incredibly high. Remember, we sold at 30,000. We have been expecting a move to 27,000 ever since. We have seen that now. The question is, are we going to see the second leg of that move, which is to break below 27,000 to 25.2K? We're going to take a look at that in the short-term analysis. So daily trend is starting to look very shabby, very weak, and our technical indicators are starting to adjust for this shift in volatility, this shift in momentum, and they are starting to suggest the trend is weakening. The trend is weakening. However, the daily and weekly trend are 2 different things. The weekly trend is actually still very much positive. If we take a look at the weekly trend, we can see we are still in an overall uptrend, but again, guys, it doesn't look amazing. We got rejected from 30,000 as well as the upper band of the Gaussian channel. So we never really broke into that macro uptrend. As I said already, we're in a reversal pattern. We're in a weekly and daily uptrend. We're not in a monthly. We're not in a macro uptrend. We had to break and close a monthly candle above 30,000 to do so. And we still need to do that. If we break and close a monthly candle over 30,000, that will be the trigger for a macro uptrend. The weekly uptrend actually remains intact until 25.2 to 24.4K is lost. And therefore, we can't assume new lows, or we can't even be talking about the possibility for new lows until 24.4K is lost, as this is about a 365-day support level. So a push toward this level and a bounce is very likely. It is possible. Again, it's hard to predict exactly what is going to happen if we come down to this level, but we'll have to reassess it as it occurs. But for now, guys, if we do lose 27K, we can expect that continuation towards that next level. So when would be the next best time to look at buying Bitcoin, and how is the macro trend shaping up from a technical perspective, from a structural perspective? How high could we go, and could we actually see new lows? So let's talk about those 3 points, and we'll go into short-term price action. So currently, again, 30,000 is the major ejection point on the chart. We can see every single bull run cycle, we have got obviously our tops, we have got our bear market bottoms, and we have 2 more key points that a lot of people don't really talk about. We have our bull run yearly support, and we have the local high of the first dead cat bounce. I've represented these by the dotted trend lines and the horizontal lines. Both of these points are actually significant trigger points. The dotted trend line is a volatility trigger, meaning every single time we break and close a monthly candle above the dotted trend line, you can see the angle of the trend significantly steepens from the bottom to that point, and then from that point to the bull run top. The angle of the trend steepens. If the angle of the trend steepens, it suggests increased volume, liquidity, volatility, and momentum. So we know that $48,000 is going to be the trigger for a push to a new all-time high for Bitcoin, a new all-time high. The next one is, of course, the yearly low of the prior cycle, the red line. We know that every time we close a monthly candle above this level, we see a push towards that dotted trend line where we then reject from. Okay, so if we close a monthly candle above 30,000, we're going to expect a move to 48 and then a rejection from 48 before we push back again, and that will be the trigger towards a new all-time high. So we're looking for those levels. Now, The 4-year cycle bull run should not start, and bull run meaning that cross over 48k, it should not start until around May, April 2024 or March, April 2024, around about that time. According to our date range trend, we generally see around 17 months of consolidation, upwards grinding price action from bottoms to tops. Now, what is the possibility that the 4-year cycle gets deleted and we go to new lows? To answer that question, we have to look at two things: key horizontal levels and economic drivers of price action. What actually moves macro price action? Number one, key horizontal levels. We are not going to go to new lows unless $20,000 is lost. If $20,000 is lost right here, we are going to new lows. Simple as that. If 24.4k is lost, we push back into this horizontal consolidation. We're in more of a neutral territory in macro. It is looking bearish, but you are more neutral. If $20,000 is lost, I would expect new lows to push toward the downside. If, of course, the POC level is lost, I would definitely expect a macro continuation. But this doesn't happen spontaneously. Price doesn't just move. There are drivers of price action. There are things we need to see for the macro direction to shift. And I'm going to tell you what they are. The macro direction needs to shift. Now, ever since this point here, we saw bullish consolidation. But we didn't just see bullish consolidation. If we look at the macroeconomic data, what we saw was inflation was topping and interest rates were starting to plateau at their top points, meaning not the overall rate, but the adjusted additional rates month on month. They go 0.25, 0.25, 0.5, 0.75, 0.75, and then they go back down to 0.5. And ever since that drop down, that pivot, we create a general trajectory. If we look at the chart of interest rates, we have 0 point, we have positive, we have negative interest rates. If we look at the month on month change, okay, we have a general uptrend, inflation tops, okay, and then interest rates start to move down. We are currently in a downward trajectory. This is where we are now. We're expecting a downward trajectory of interest rates over the next few months that will eventually result in a pivot. This is what the market expected at this point. The market moves on perceived systematic risk. It expected this trajectory, it priced in the trajectory, and it rallied based on the fact that later on down the track, the market is eventually going to pivot, the interest rates are going to pivot, and then the cost of debt is going to drop, and the market is going to be favorable for investors, and risk asset prices will rally. And the market front runs that because it's based on perceived risk, not actual risk. So, if we want to see the macro trend reverse, we have to see the trajectory of what is expected shift. How do we see the expected trajectory shift? Well, what causes interest rates to move? Inflation. CPI is a leading indicator for interest rates. So, if we want to try to predict macro reversals, we have to look at what is happening with interest rates and more importantly, what is happening with inflation. What we just saw was month-on-month data for inflation rise. This is not a good sign. If month-on-month data rises for inflation, we had inflation going up, okay, we had it going down, and now we've just seen a little pivot. We've just seen a little jump. If this jump develops into anything further over the next few months, that could trigger interest rates to either remain where they're at and keep pushing 0.25 and again, continue to hike up those interest rates, or even go jump back up to 0.5, and that the 0.5 jump will shift this narrative and push the prices down. So we do have to be cautious about that. That is something that could happen. It'd be very interesting to see if the US government actually does that, because it would be very contradictory to what their narrative is and what message they are trying to push, which is the economy is looking better. And of course, again, they're printing money, they're bailing out the banks. They can't do all of that if they rise interest rates more. It can't happen at the same time without massive negative effects on the US dollar. It can't happen. They have to choose one or the other. So the current negative narrative is at risk. If that happens, if the current narrative shifts, we could see that. Where would I be looking to buy Bitcoin? A monthly close over 30,000, I will look to buy Bitcoin. Or a push and bounce in the 24.4 to 25.2, that is another key level I'll be looking to buy Bitcoin if we get it. If we don't, who cares? If we get it, we do. I'll be looking to buy in there. Let's go with the short-term price action, guys. Actually, before I do that, one more thing. A few days ago, we warned you of this chart. This is the weekly chart for Bitcoin, and this is, of course, now what we want to call the RSI shift point according to a specific level on the RSI, which is the 62 on the RSI on the weekly. I'm going to go ahead and draw a line. I don't know why I deleted, but I think my charts were reset overnight. So the 62 level on the RSI on the weekly. Every single time we see a break below that level, we can see it over here. Every single time we see a break below that level from the top side down, we actually see a significant pullback for Bitcoin. And the smallest pullback we have seen from that move was 20%. And that was all the way in August 2020. Now, if we look at the current price action, we have actually seen a drop below that level. We warned you about this a few days ago when Bitcoin was up around 29,000. We said we're shifting on the weekly RSI. The RSI has shifted negative. Expect a big crash to come. Expect a crash to occur. Since then, Bitcoin has actually dropped around about 9%. So it has dropped a fair bit. But if we take the smallest drop, which was 20%, and apply it to the current price action, that actually, not even coincidentally, takes us exactly to, if we take it from 29,000 to 30,000, it takes us exactly to the 24,000 to 25,200, right into that major support zone. Again, this is a chart no one was talking about, no one was even looking at. People don't focus on higher time frame momentum. They don't understand how momentum shifts can influence price action. Again, like we said at the start of the video, momentum is a leading indicator for all other metrics of price action. Volume, liquidity, speed, velocity, all those things are determined or again linked to momentum. So if momentum starts to shift, we can go ahead and create a narrative around what is happening with those other metrics of price action and thus determine the strength of the trend before it even starts to move. And it's exactly how we've done this, exactly what we've done to predict this. The question is now, are we going lower? So 25.2K to 24.4K is of course the next major support on the higher time frame chart. If we lose 26.8K, we are going to see a continuation towards that level. You can see we actually bounced on 26.8K absolutely to the freaking dollar, absolutely perfectly. If we see that level lost, we are entering a low resistance range. You can see high resistance range, low resistance range. The VRPV suggests this area has an area of low volume, low liquidity, and of course low historical orders. Low orders equal low liquidity equals doesn't require a lot of volume to push through resistance. Therefore, this area is a level of low resistance or low resistance range, LRR. That's what I like to call it. If we do drop below this level, we're going to see volatility increase. We're going to see liquidations and liquidity increase, and we're going to see speed of price action increase. What does it mean? A volatility, liquidity, and volume increase. What does that tell us? Well, if you go back to what we were talking about before, that is leading for momentum. That means momentum's increased. But if we're moving downwards and breaking through a resistance, does that mean we have positive momentum? No, it means we have increased negative momentum, what does that suggest about the price strength? Well, it suggests we have decreasing or weakness in our price strength, or we have a strong downtrend. That pushes the price downwards, we result in a crash. Now, there is one key thing. This level here, guys, is major support. Major support is major support until it is not. We do not expect a crash down until this level is lost. We told you guys this was deviation. We sold at 30,000. We expected a move all the way down to 26.8. We have seen that move. Now we are saying we are at support. Expect a possible bounce, which you've seen. If this bounce does not push the price up, and the key levels we need to get above are of course going to be 28.8 and 29.6. These are going to be the bullish triggers. If the price cannot get above these levels before it drops below 26.8, expect that downtrend to occur. If the price can push above 28.8 and 29.6, the bulls are going to be able to reclaim strength and push the price over 30,000. But very, very unlikely that happens. The much more probable scenario is the price continues strongly downwards. Remember guys, we have been warning you about this for a very, very long time. We bought 16.5K, we sold 30,000. Ever since mid-April, we have been telling you relentlessly, the trend is weakening, the momentum is not there, the speed, velocity, everything is suggesting the price is going down. We're going to see a correction If you have been paying attention, congratulations. If not, it's okay. It is part of the game. No one is right all the time. I don't even claim to be right all the time. But what I would suggest is focus on the charts and the data. Ignore what people are saying. Ignore what I'm saying. I don't even tell you my opinions. If you want to see my opinions, watch what I do. I bought 16.5K, I sold 30,000. There's my opinions. You can copy my opinions. If you want to find out what the charts are telling you, what the data is saying, what the probabilities are, then listen to what I tell you, because that is all I am doing here. I am telling you what the most probable scenarios are. I am telling you where the price will go if certain levels break. And you can execute trades based on that, guys. Facts overthrow opinion and emotion every day of the week. Okay, thanks for watching, guys. I hope you had a fantastic time watching, and of course I hope you guys have a great day. If you're interested in learning how to trade, you can join us on the Crypto Academy courses at gmail.com. Send us an email. You'll get access to all of our information and learn everything we use to analyze the markets on a daily basis. This is a fantastic course if you're brand new to trading. If you're new to trading, or you're new to technical analysis, or you want to get better at technical analysis, this is for you. If you're already skilled, if you're already professional, if you already know what you're doing, not worth it. But if you are new, 100% will give you the essential tools, information, and foundation to build your trading career from. Thanks for watching. I hope you all have a great day, and I'll see you guys in tomorrow's video.